Hello, everyone. I'm going to demonstrate how to do homework 1. Okay, now, let me share the homework 1. Let's look at the directions of homework 1. Okay. I think, you can read this direction. You can read these directions, and you're going to do 3 essays, in the student management, managed portfolio. Okay. I'm going to show you how to do 1. Okay. I'm going to choose AAA. Sorry, I'm going to choose triple Q. Okay. Invesco triple Q trust. Okay. Before I get started, I want to emphasize we're going to use the Excel to do the calculation. I'm going to follow the formula step by step, okay, to go to our results, to get our results. And I'm going to explain how to do this as much, in details, okay? However, when you use Excel, and you can reduce a couple of steps into 1 step, okay, or you can you can use some functions to complete a function, to complete a couple of functions, okay. So anyway, in my demonstration, I'm going to show, as many details as possible, okay. Okay, let's look at the AAA. I'm going to download the close price, daily close price of AAA, and then download the dividends, of AAA, and then use this raw data to calculate the daily return. Okay. I'm going to download the data in the past 5 years in case we're going to use this data later on. Okay. So in order to download the data, first we're going to use this function. Right? We're going to use this. In order to download the close price data, we're going to use this function. Okay. These functions actually are the same, and they return the close prices to reflect the stock splits, consolidations, stock dividend bonus, rights offering, entitled and or entitlement, as well as spin-offs. Anyway, because the stock splits have been reflected, have been adjusted in the close price, so we don't have to make an adjustment for the stock splits. And what we have to do is include the dividends and use the close price and the dividends to calculate the daily return. All right. Okay. Now we are going to use so because both functions are the same, so I'm going to use the simple one. Okay. Now go to the Excel. I leave the first row for the title of the titles of the column. So I'm going to do to download the data, beginning with the second row. Okay, before we move on, also I want to emphasize, I want to point out, if you want to download the Bloomberg data, you have to go to the Bloomberg laboratory or the Bloomberg room. Okay, when you open your Excel, you have to make sure in your Excel ribbon you should have this tab Bloomberg. Okay, if your terminal doesn't have this tab, I suggest you to change to the other terminal until the terminal shows this tab. Or you can fix this issue yourself. Now, at the end of the homework one direction, you can find the note 4. If your Excel does not have the Bloomberg tab, then there is a direction to tell you how to fix this problem. Okay, you can follow up, or you can go to this. You can use this link to find the directions to fix this problem. Okay. All right, now let's go back to the Excel. In the Excel, we're going to use this function to download the close price. And first of all, in this function, there are arguments. The first argument is the equity identifier. Now we can see, right? In this function, the equity the equity is AAPL, US equity. Okay, this is Apple. Of course, we want to download the data of AAA, so we have to find out the AAA's. We want to download the data of QQQ. Okay, then we have to find out the QQQ's equity identifier. So go to the Bloomberg. You type in QQQ. Now you can see, okay, here, this is QQQ's identifier, QQQ US equity. It is, the name of this fund is Invesco QQQ Trust Series 1 Class USD Inc. Right? This is exactly the fund that the student managed fund hold. Okay, so this is what we want. Now go back to our function. So here, we have to change Apple to QQQ. Okay, this is what we want. And the second argument shows we're going to download the price, the close price. And then next argument is the beginning date. Just as I said, I want to download the data in the past 5 years. So in the past 5 years, it should begins with 2021, right? So I'm going to begin with the beginning date is December 31st, 2020. Okay, this is my beginning date. And my ending date, my ending today is February 23rd. Okay, the last trading day is, I believe the latest trading day is February 20th. So I'm going to change this one into February 20th. So this is the This is the last day. Okay. Sorry, this is the function that we use to download the close price data of QQQ. Okay. And then after you download the data, I think you'd better save this data in pure number, because now we are connected with the Bloomberg terminal, right? And because of this connection, then the function will work. The function will work. Okay, if we don't have this connection, yeah, if there is no connection with the Bloomberg, this function will not work. So yeah, to be safe, I think yeah, we can copy and paste Yeah, we paste in the pure number here 1, 2, 3. That is pure. Okay. And because you save in the pure number, then this column it is a number. Now I'm going to change the format to the date. So highlight this column and then go to right click and then choose format cells. Okay, I'm going to choose the format date. Okay, and specifically, I'm going to choose this format. That is the same format in our downloaded data, right? Okay, now I change the date. Sorry, not change the date. I change the format of this column into the date format. Now I make a note. This is the date. This is and then this column is the price of the triple Q, right? So I make a note that is triple Q price. I use PRC to represent the price. Okay, and of course this sheet, I name this sheet as triple Q price or price. Okay, price. Okay. And now, yeah, I'm going to have a new sheet. In this sheet, I'm going to download the dividends data. In your homework direction, okay, yeah, you can find the function to download the dividend. Okay, this function download the dividends in the history from very beginning, of the company. Okay, of course, we don't need so many dividends. Then I'm going to use this function. In this function, we can see the two arguments. Okay, these two arguments specify the beginning date and the ending date. Okay, so I'm going to use this function. Okay, and of course, I leave the first row for the title and then put the function here. Okay, now let's look at the argument. Of course, the first argument, this currently it is Apple. Now I want to change the Apple to triple Q. Okay, and then second argument, that means the dividend historic data O. Then this column shows the starting date. Of course, I'm going to download the data starting from 2020, right? 2020, December 31st. Okay, this is my starting date. My ending date of dividend data is 2026, February 20th. Okay, now, check your function, make everything is fine, and then click enter. Now we get the results, dividends. Okay, again, because this table uses, this table uses the functions, right? To be safe. Yeah, I think I'd better save this table in the pure number. Yeah, in the pure number. In case I might lose the data if I don't have the connection to the Bloomberg. Okay, so I copy and save this data in pure number. Okay, now this time, okay, this time. Now let's look at the columns. How many columns do we have? We have 7 columns. Okay, what are those 7 columns? We can check with the Google Gemini. If we check with the Google Gemini, I think now let's see. Okay. Yeah. Oh. Okay. Anyway, if you check with the Google, anyway, if you check, what are the colors? What are the colors of Bloomberg dividend data downloads? Okay, now we can see 7 dividend columns. Okay, first one is declaration date. Okay, so I just copy. Now, so first column is declaration date. All right. And then the second is ex-dividend date. The third one is record date. Oh, the fourth one is payable date. Okay, and then the fifth column is dividend amount. This is the dividend amount. Okay, just use dividend. That's fine. Yeah, for simple. Okay, and then dividend type. I think the next column, the sixth column is the frequency. So yeah, when you use the Google Gemini, yeah, you have to be careful. Sometimes it would make mistake. So I think yeah, in our download data, okay, I believe this is a frequency, right? This is frequency, and the last one is the dividend type. Okay. Now, of course, yeah, we're going to because A, B, C, D, 4 columns are dates. However, yeah, therefore now currently the format is a pure number. So I want to turn this pure number into dates. Okay. I believe you can do this right now. Okay, highlight these 4 columns and then right click. Choose the format cells, then choose the date, then choose this format. Okay. Now, of course, yeah, we're going to use this data, right? We are going to use the dividend, yeah, because we know, yeah, when we calculate the dividend, when we calculate the daily data, that is current day's close price plus the dividend received in this day minus previous close price divided by previous close price, right? So yeah, we're going to use this dividend amount, and then how can we specify the day in which dividend is issued, or in which the investors receive the dividend? Then we have to use the ex-dividend date. Ex-dividend date. What is the ex-dividend date? In investment, we have learned this. Ex-dividend date means if an investor owns the share before the ex-dividend date, he or she has the right to receive the dividend. Okay, what does this mean? That means, yeah, if you purchase the triple Q, now let's say, okay, before we move on, I want to organize this data. Yeah, this data is, yeah, I want to arrange the data in the increasing days. So yeah, I'm going to sort the data. All right. Highlight and use data, and then I'm going to sort. My data table has a header. Okay, and then I'm going to sort by ex-dividend date. Yeah, from oldest to newest. Okay, I'm going to arrange the dividends, yeah, in this order from the oldest date to the newest date. All right. Okay. Now we can use this one, right? So first, yeah, when we use this data, yeah, we have to use the ex-dividend date. Yeah, because yeah, for example, yeah, let me use this one as an example. March 22nd, right? If you purchase the triple Q on March 22nd and become the shareholder, then you have no right to receive dividend. If you purchase the triple Q in the day before March 22nd, suppose March 21st, then you you have the right. Yeah, if you purchase the triple Q on March 21st and become the shareholder, then you have the right to receive the dividend. Okay, then in this case, Yeah, in this case, how can we suppose you purchase the triple Q on March 21st at the price, at the close price, and then hold this share for 1 day and sell it on March 22nd at the close price. Then what is your holding period return? Okay, then of course holding period return is the March 22nd close price plus the dividend you received, right? Because yeah, even if you hold it for only 1 day, yeah, you have the right to receive the dividend. So plus the dividend you receive, then minus March 24th close price divided by March 24th price. So yeah, we are going to use the ex-dividend date to match the data, to match this dividend amount to the price data, right? Okay. Now we're going to match the data. We're going to match the data. Before we move on, yeah, I'm going to name this sheet. Yeah, I'm going to name this sheet. This is the dividend, right? DIV. Okay. And now, yeah, we don't do this, yeah, because we have saved the data, yeah, in dividend sheets and price sheets. So we don't need these two sheets anymore. Yeah, you can remove it and you can delete them or you can keep them. Okay. It is up to you. Yeah, for simplicity, I'm going to delete them. I'm going to delete these two sheets. All right. Okay. And then before we merge these two data sets, I want to check the dividends. Okay. Dividend, yeah, this is a number, and now I want to check the dividend type. This is the income, yeah, the quarterly, yeah, is a frequency quarter, and this one is not a quarterly dividend. It is non. It is a special cash. Okay, it is yeah, it is good. Okay, yeah, it is good. It is okay. Okay, so yeah, all dividends are good. Okay. Sometimes, yeah, if a company experiences the stock split, sorry, if not stock split, if a company has a spin-off, then there is some record. In this case, we have to be careful. Okay. Yeah, we want to make sure. These are dividends. Okay. And also, now, yeah, we are going to match the data. Okay, we can match the data manually. For example, yeah, we can copy this one, and then we can see, yeah, for this dividend, the ex-dividend date is March 22nd, right? 2024, 2021. Then go back to the price data. Okay. March 22nd. We paste the data here. Yeah, impure number. March 22nd, 2024, 21. Yes. Yes. Okay, we can do this manually. One by one, but it is a very time consuming. Yeah. So yeah, when we are processing a huge data, then I think it is better for us to use some Excel functions to match the data. What functions are we going to use? We're going to use the VLOOKUP function. Okay. Now go back to our homework. Yeah, there is a short explanation for the VLOOKUP function. Okay. This function, first of all, let's look at the arguments of this function. Okay. The first argument is lookup value, and that is the value you want to look up. And then is the range. The range which contains the lookup value in the first column of the range. Yeah, be sure that the lookup value should always be in the first column in the range for lookup to work correctly. Okay, that is the second argument is the range, is a specified range in which you are going to, in which there is a lookup value and the value that you want to return. Now, third argument is the column number. Yeah, it indicates the column in the range that contains the return value. That means, yeah, in this column, you want to return a value in this column at the same row. Okay, true or false? We usually true. That means approximate match. False, that means exact match. Yeah, we want to use the exact match. That means we're going to choose false. Okay. For the details of VLOOKUP function, you can go to this website. You can use this link for the detailed information. Okay. Now, yeah, we're going to use lookup. Now let's go back to our Excel. Now, yeah, I'm going to use lookup function, yeah, to match the dividends on the X dividend date in the price table. Okay. So here, I'm going to use VLOOKUP. Now you can see, okay, looks for a value in the leftmost column of a table, and then returns a value in the same row from a column you specify. By default, the table must be sorted in an ascending order. All right, okay, now we're going to use this function, VLOOKUP function. The first argument first argument is the lookup value. We're going to look up. Yeah, we're going to look up this value, right? We're going to look in the specified range. Okay, so I click here. So that is A2. Okay, in this row, that means I'm going to look for December 31st, 2020. Okay, where am I going to find this value? So I have to specify a range. The range is here. Okay, I'm going to specify a range. This is the range. In the range, yeah, I have to put the lookup value in the first column. Okay. Now this is the range. Now go back to the price. Okay, here, yeah, I put the range, right? That means the range is in the sheet. Oh, sorry, made a mistake. Made a mistake. The range should be in this sheet. Okay, the range is in the sheet, dividend sheet from B2 to E22, right? Okay, now then, comma. Okay. Then from this table, I'm going to return the number from the column 3, right? Yeah, in this table, yeah, this column 1, column 2, column 3, column 4. So I'm going to return the value in the column 4 at the same row. So that is 4. Nice. And then optional argument, false or true. Just as I said, we're going to use false. That means we want to have an exact match. So false. Okay. Before we move on, I want to point out this. Yeah, later on when we copy the function, when we the range should be fixed, should be locked, right? For so here it is the function, right? Now let's go back to the price sheet. Here it is a function. However, when we copy the function to the other rows, then this range should be locked. So how can we lock it? Highlight this range and then click function 4. Okay. After you click function 4, then you can see, yeah, B2 turns into B2, and E22 turns into $E and $22. That means this range has been locked. Okay, this. Now I click enter. Okay, for the first row, it returns not available. It is understandable, right? Because this lookup value, December 31st, 2020, is not in this table, right? Yeah, I'm going to highlight our searching range. Okay, I'm going to highlight it. Oh, so sorry. Okay, this is our range, right? So December 31st, 2020 is not in the first column, right? So the return is not available. It is reasonable, right? It is reasonable. Okay, and now, yeah, I'm going to copy this function. I'm going to copy this function to the other rows. How can I do that? Yeah, I can move my cursor to the bottom right corner, and then until it shows a black cross, and then double click. It stopped here. Yeah, because when you use this function, yeah, it copies the function until the end, because I already have a number here. So the Excel recognize this row as an end, right? Or down to the end. But however, it is not. So I'm going to do this again. Okay, I'm going to do this again. I'm going to remove this one. I'm going to remove this one so that the Excel can copy the function to the other rows down to the end. Okay, move the cursor to this corner, the right bottom corner until a black cross shows up. Then double click. Okay, now we can see. Oh, come on. Sorry, the function is not right. Okay, function is not right. Now, function is not right. Now let's look at function. Okay, function is not right. Function here, that should be the range, right? That should be the range. Actually, the range is here. Okay, so I'm going to do this again. Now the range is here. Okay, and then lock this range. Use function for. Right now, let's check the function. Okay, we look up function A2, that is lookup value. Yeah, we are going to look for this value where in this range. Okay, this range is locked. And then we're going to return the value in the range. Yeah, in the column 4 at the same row in the range. Okay, false. That means we need an exact match. That means this number in this number should be exactly match the number in the first column of searching range. Okay, so now double click. I believe this time works, right? This is the dividend. Okay, now let's double check. On March 22nd, 2021, Triple Q issue an amount of dividend, approximately 40 cents. Now let's go to the dividend table. Okay, it is right. It is right. Now let's look at the second one. Second dividend. Second dividend was issued on June 21st. The amount is this one, 0.39679. Now let's check. Okay, June 21st. Here we go. Here we go. Now we can see, yeah, the dividend exactly matches. Yeah, this amount of dividend exactly matches the price here on the X dividend date, right? Okay, and yeah, to be sure, yeah, we can move to the bottom and check the last dividend. Last dividend, that was issued on December 22nd, 2025. Yeah, the amount of dividend is 79408. Now let's go to the last one. Okay, December 22nd, 2025. Yeah, the amount is this one exactly, right? Okay, so that means our dividend, yeah, has been matched to the price. Okay, on the X dividend date, so that we can calculate the dividend. We can accurately, yeah, we can correctly calculate the return on the daily return or the return on the X dividend date, right? Okay, before we move on, just I want to explain. Okay, this price. Let's go back to our price function. Okay, this price, just as I said, the price downloaded from the Bloomberg using this formula, using this function, is the price that has reflected the the that sorry, here, yeah, the price, yeah, the price function, or this function that we use to download the close price. This returned price, or this downloaded price, has reflected the stock splits consolidation. Okay, yeah, these are corporate activities. Okay, because yeah, this item is very complicated. It's very, but for the mutual fund, yeah, it is relatively simple. Yeah, for the common stock, it is very complicated. I think yeah, you'd better check, yeah, whether there are specific corporate activity occurring. Okay, but for the mutual fund, yeah, generally, yeah, this price has reflected the stock splits, so there is no problem. Okay. Or in the other word, yeah, for the mutual funds, there is no such things stock splits. Okay. If you ask why, I think yeah, you have to review the mutual funds. Okay, how the shares of the mutual funds are issued to the shareholders. Okay, generally speaking, yeah, for the mutual funds, for the ETF, there is no such things of stock splits. Then you have to be then yeah, in this case, for our calculation, it is fine. It is good. Okay. All right, now let's go to the price. Let's go to the price sheet. Okay. We can make a note that is dividend. Okay, of course, because here, yeah, for these columns, n over a means not available, means it is a missing, yeah, there is a missing value. If there is a missing value, or if a value is not available, it is impossible to do the calculation, yeah, to do the operation. Okay, then in this case, yeah, we want to remove this, yeah, we want to change this sign into the zero, because not available, yeah, here means no dividends, right? So yeah, economically, on December 31st, 2020, there is no dividend, so dividend should be zero. So we have to change this one into zero. We are going to use a even though function. Okay, even though function. If no function, if NA function, if not available function, then the argument is here, is C2, is dividend. Okay, this function return, yeah, if the C2 has no value, or the value in C2 is not available, then it returns zero. Otherwise, it returns the value in this cell. Okay, now, yeah, I have to close this function. Oh, come on. You enter. I think I'm using the right function. Oh, sorry. Okay. If the value is not available, then return zero. Otherwise, the value. Okay. So now we can see, right? Okay, and we use if not available function to remove or to turn this notation not available into zero. Okay, into zero. And then I'm going to copy this function to the other row. Okay, so now we can see right here. Yeah, there is a value. Yeah, for at this row, the 56. Now we have a dividend. Then this function returns the dividend. For the other not available or missing value, we return the 0. Okay, very good. Now, yeah, we can make a note, or we can name this column. This is dividend. Okay, this is dividend. Or to differentiate this column with this column, we can use dividend 1 to dividend. Actually, it is. We can use the dividend. Okay, and then this dividend 1. All right, dividend 1. Okay, and then name this dividend 0. 0. Okay, and now, we can calculate. We can calculate the daily return, right? The daily return, because when we calculate the daily return, we should know the previous close price. So for December 31st, 2020, we don't have a previous day's close price. So there is no return for this day. And then we can calculate the return, daily return, beginning with January 4th. Beginning with January 4th. Okay, the January 4th is the first trading day in 2021. Okay, so now, we calculate. So using formula, the current price plus dividend. Dividend in this day is 0, and then minus the previous day's close price, and then divided by the previous day's close price. Okay, and if usually we show in the Excel we show the return in decimal. Okay, we show the return in decimal, and here there are 5 decimal places. Okay, in the homework I want students to keep 6 decimal places. Okay, so now, I'm going to calculate. First of all, I'm going to calculate. Okay, I'm going to copy this function to the other rows down to the end. Okay, I'm going to use a shortcut, that is double click this black cross. Then we can copy the function to the other rows, and do this for all the rows to the last row. Okay. Now, I'm going to change the decimal places into 6. So I highlight this one and right click, and use the format cells. We use the number. Now the number should have numbers should have 6 decimal places. Okay, then I make a note. That is a return, right? I use RET to represent the return. Okay, and this is how we can calculate the daily return. Next, I'm going to use the daily return to calculate the average, the arithmetic average, geometric average, cumulative return, and the annualized return. Okay, so before you leave, I'm going to save this Excel into my local drive. I'm going to save it in my download file. Okay, so that is homework one. Homework one demo. Okay. Next time, yeah, in the other video, I'm going to discuss how to calculate the returns. We have all kinds of returns.